Hi, this is Jonathan Fallick with JF Capital Advisors. JF Capital Advisors, for those of you that don't know, is a strategic and capital markets advisory firm focused on the hospitality industry. Throughout this crisis that we're all going through, I hope that everyone is safe. I hope that everyone's families are safe. And it's amazing how many people have adapted to working at home. So regards from the temporary worldwide headquarters of JF Capital Advisors. Today I'll be talking about franchise agreement compliance issues. We've been asked a lot of questions about how to think about franchise agreements, how to not violate them, what issues franchisees should be aware of. So what I'll start off by telling you is that every franchise agreement is different. The side letters and addenda are different. The negotiating setup is different. So do not take anything that I say as guidance as to what you should do with your transaction. Please get help from a competent professional, whether that's an attorney, an advisor. If you'd like to get the JF Capital Advisors point of view, feel free to reach out and contact me at jonathan@jfcap.com or 917-238-6917. In these unprecedented times, we've had owners, operators, lenders unsure what to do and quickly shutting down or attempting to shut down many hotels. And where the hotels have not been shut down, we've seen operations go to very minimal staffing, very low levels of occupancy, so that certain owners and operators can take advantage of blocks of group business for first responders from hospital systems, as well as distressed passengers or customers. So as we've been asked about restructuring loans and how to stay compliant, one of the things that keeps coming up is how long does this last and when does it come back? So there are a number of things that are happening with the franchisors and the brands right now where they're waiving a lot of requirements, a lot of things are being put on hold. At a point in time, they will come back. So there's a short-term issue, a medium-term issue, and a long-term issue. We've seen a lot of franchisors waive certain PIP requirements, waive certain operating standards, be lenient with certain fees, not all fees, in past recessionary environments, and that lasts a few years until we get to the other side of it. And then they're much more focused on the undone PIPs, the undone brand standards, on quality assurance, and on maintaining the integrity of the assets and the brands. So each brand has a different franchise agreement form. It's important to look at them, but I'm going to run through about a dozen issues that we keep getting asked about. So one is commencement dates for both construction and for PIP work. And many of the franchise agreements, almost all of them actually, have a date by which the commencement of construction must begin, and some have a date by which commencement of the PIP must begin. And they have dates for completion of the PIPs and completion of construction. A lot of these are being waived right now. Even those that aren't being waived are going to have to be waived because there are a lot of construction projects that are shut down. A lot of development deals or PIPs that were going to be done may need to be value engineered and repositioned. So what you want to do is you want to make sure you get the franchisor to waive and formally extend the requirements to complete the PIP, the requirements to complete any kind of construction, and any of the other milestones that come along with that. If the hotels are closed for an extended period of time, PIP work may not be able to commence when you thought it would. Similarly, we're having some issues with product that's supposed to arrive from China, be shipped and arrive from China. When will that happen? How will it happen? What will our relationships with China be? So be very mindful of it because the PIP is generally attached as an exhibit to the franchise agreement and is guaranteed by the franchisee. So failure to do the PIP on a timely basis could trigger a default under the franchise agreement. And that for those that have mortgage loans, that could create a trigger of a default under your franchise agreement. So we've been asked a lot about force majeure. Force majeure is a very interesting concept and definitions differ. So very important to understand what your franchise agreement says about force majeure and how that suspends certain requirements for both the franchisee and the franchisor. They may not be consistent across different franchise agreements, and the force majeure provisions may not be consistent between your franchise agreement and your loan agreement. So be very careful with that, and with compliance with anything that is not altered by force majeure. Brand requirements. So everyone knows that the brands have significant standards and they have systems. As part of their systems, they put together requirements for training, for marketing, for providing different kinds of services to franchisees. In the current environment, most of the major brands have laid off or furloughed significant portions of their staff. So there are a lot of the systems that the brands would typically provide, a lot of the services, a lot of the approvals that you need are simply not available. They're not there. The people are not there. The brands are working with extremely limited staffing. As a result, the brands have waived a lot of the operating standards that were otherwise in place. In connection with their own furloughs, the major brands have laid off or furloughed a lot of the field marketing people, the digital marketing people, e-commerce people, national sales teams, group sales teams. So there's not a lot of brand support for the individual hotels that are staying open, and you'll have to be very careful and very mindful of what happens when we come back to some level of normalcy, how quick those professionals working for the brands are added back, because it has a direct impact on what sort of national sales leads and group leads are going to come into your hotel. There's a requirement for continuous operation in most brand agreements. You have to continue to operate the hotel. One of the first things that we did for most of the hotels that we asset manage, about a dozen or so, and others that we advise on, is we went to the brands and we said, we need approval to either shut down or immediately suspend operations. And the brands were very cooperative and very understanding of that, because they were working on shutting down a lot of the hotels that they owned and or operated as well. Probably not a big issue, but I would make sure that you have in some form of writing that the brand has consented to either your shutdown or to your going down to a limited amount of inventory and very limited operation. Brand standard compliance. So the franchise agreements require that you maintain compliance with brand standards. Failure to do so can trigger a default under the franchise agreement. In this environment, the brands have waived a lot of their brand standards. In fact, they waived most of their brand standards that do not relate to fire and life safety systems. So there's been a relaxation on booking issues and policies, on sales programs, on housekeeping, on hours for food and beverage, types of food and beverage service. The brands have been very lenient and very relaxed, understanding that owners are dealing with an unprecedented situation. That notwithstanding, you want to make sure that you've received communication from the franchisor, and if you haven't, you want to establish that communication and make sure that they're okay with the things that you're doing so that you're not in default. At a point in time when we're on the other side of this pandemic, we're going to see the brand start to tighten back up on standards, and different franchisees are going to have a lot of negotiations about what they need temporary, semi-temporary, or even permanent waivers from in order to make their math work, in order to relieve some of the financial burden on operating the hotels or on restarting the hotels. So franchisees should be very cognizant of when those standards are being reintroduced, how they're going to be policed and monitored by the brands. And then one unintended consequence, to the extent you are open and you've been granted a reprieve from the brands for some of the standards, what will happen with online reviews? What will happen with a TripAdvisor review when someone goes online and says, I've been staying at this blank branded product or hotel for years and years and years, and I always had room service. I always had this kind of breakfast. I always had this kind of service, and it wasn't available. So it's unclear what some of the implications will be, except we know, having gone through multiple cycles in the past, that at a point in time when it looks like the industry is recovering, the brands will tighten up the screws on brand standards and will be much more focused on maintaining compliance and maintaining the integrity of their brands. Consents. So if you read all the way through the lengthy franchise agreements, which are a lot of legalese, they mostly require consent if you want to hire an architect, a contractor, a designer, an interior designer. They require consent for certain general contractors. They require consent for design, for a PIP and for the actual design, not just the designer, for a PIP and for construction work. If you go to the brands right now, most of the people in those design and construction departments and the brand teams are putting out their own fires. A lot of them are furloughed. So response times you should expect are much lower, much slower, and you should plan for that accordingly. By the same token, to the extent you actually have a plan and you're ready to go and want to do things, you might find a very receptive, very willing voice on the other side of the phone when you're contacting the franchisor, because they don't want to get in your way if you're going to commence a renovation project. So please be cognizant of that. Plan and design approval, I touched on a second ago. If you have a PIP planned, if you have a PIP planned, or if you have new construction, the brands are going to have to sign off on your design. You may not get a quick sign off on your design because there are not a lot of people there. There are not a lot of professionals sitting around waiting to approve. That might slow things down, and as I said a moment ago, that might actually work in your favor. Lease approval. So generally speaking, the franchisor would need to consent to a meaningful or material lease that impacts the operations of the hotel. So in this environment, we have many hotels that we're working with that have either contracted with or attempting to contract with state agencies, municipalities, medical systems to take big pieces of contract business. To the extent you lease out your entire facility or lease out a meaningful portion of it or lease out your food and beverage operation, that may require brand consent. So I would check or have your counsel or have your asset manager or advisor check what your franchise agreement actually says. And if you need approval, get that approval. There's also provision in many franchise agreements regarding failure to pay debts. And the provision essentially reads that the franchise agreement can be terminated immediately if the franchisee does not pay debts as they come due, if there's a general assignment for the benefit of creditors, or if the franchisee admits in writing its inability to pay debts. So one of the things to be very careful about is if you're putting things in writing to a lender or to a franchisor to basically make your case, and you say, we can't pay our debts as they come due, you might have significant liability or potential liability under the franchise agreement. You might have potential liability under the loan agreement that you have or any guarantees of the loan agreement. That's the subject of a different video that we'll be doing later today. Additionally, appointment of a receiver. In many franchise agreements, it can be grounds for default and for termination of the franchise. So there are a number of issues at play. Every situation is unique. What we've found in dealing with almost all of the major franchise companies, all of the big brand companies, is they've been very flexible in understanding what issues owners and borrowers and their franchisees are going through. They've been accommodating, but they're also going to be very concerned about the future of their brand. So while they're accommodating now, be very cautious, be very mindful of doing things the right way. One last piece that becomes very critical, to the extent you ask your franchisor for a number of items of relief or changes to the terms of your franchise agreement, that's a modification or could be a modification or an amendment to your franchise agreement. And almost all mortgage loans will have a provision that states that you may not modify or amend the franchise agreement without the lender approval as well. So you may get what you want, as you want, where you want from the franchisor, but if you do it without coordinating with your lender, that could create a real problem. So once again, Please don't rely on anything that I've just said to make specific requests of your franchisor or of your lender. Every situation is unique. This was provided, this video was provided in order to answer a lot of questions that we keep getting about franchise agreements in general, how to think about some of the unintended consequences. If you'd like to discuss any of this further, feel free to contact me at jonathan@jfcap.com or at phone number 917-238-6917. Thank you very much for listening. Stay safe.